Okay, let me know if you can. Can you see my screen, please? Can you see my screen?
Yeah, we can see it, sir.
Okay,
Yes,
thank you.
yes.
So, capital allowance. What is capital allowance all about? So, at the beginning of our lecture, when we are working on the loss relief, I tried to give the reasons for allowing depreciation by relevant tax authority. So, and this issue stems from the different depreciation method and different depreciation rates that different companies adopt whenever they are computing their accounting profits. Because some companies may intentionally want to charge high depreciation rates so that it can reduce their taxable, I mean, it can reduce their accounting profit. So if the accounting profit has been used to assess a taxpayer to tax. But in this situation now, in order to avoid all this discrepancy that we have on depreciation, then the relevant tax authority now comes up with capital allowance. So capital allowance is now granted in lieu of the depreciation. And because it is established by the law that this is what you must use whenever you want to get a relief or you want to get a claim as a result of you using your assets to generate an income since your depreciation has been disallowed. Because if the capital allowance is not given and depreciation is also disallowed, automatically what it then means is that the tax that the taxpayer will be paying will be higher. Are you getting it now? Because capital allowance is granted in order to reduce the profits that the tax will be computed on. So that is so that is what capital allowance is all about. Now, capital allowance is an allowance granted by revenue authority in lieu of depreciation charged by trade or companies, and the revenue authority will disallow depreciation as a result of different method and rate applied by different companies. Like I explained
The
earlier, you may
screen,
see
the screen
you are not seeing it again.
is up now. It's up now.
Okay. So the as a result of the different rates, different method that is adopted by different company, and tax authority also need to ensure that there is uniformity between what people will be using for the rates. So that is why they come up with this. Consequently, capital allowance is granted by the revenue authority to ensure uniformity of treatment on specific types of assets. If you have motor vehicle in your company and I also have motor vehicle in my company, it may not be the same amount, but the rate that we are going to apply will definitely be the same. Are you getting it now? So it will be a proportional. We call that type a proportional, whereby if the 10% is given to you, 10% will also be given to me as well. So then it will not be applied on what we have. So it is a relief that is granted to taxpayer who incur qualifying capital expenditure. So if you incur expenditure on some items that is not that capital allowance cannot be granted on, you will not be allowed to charge any capital. So that's why we call capital allowance. That's why we say that capital allowance is granted on a qualifying capital expenditure during a basis period in respect of assets in use for the purpose of a trade or business at the end of the basis period. So a certain percentage of the capital expenditure is granted. So if the total assets, if the asset that you have is 50 million, if the asset is 50 million and a percentage is granted, if 15% or 20% is granted on the asset, so you just only use this to claim your capital allowance during the basis period that the assets was put into use. What are the characteristics of capital allowance? It is calculated using a standardized statutory rate. So you cannot just come up with any rate. It is already provided in the law that this particular rate will be applied for this particular assets. The method of application is uniform and consistent to all taxpayers. So if you have motor vehicle, like I explained, and I also have motor vehicle, will be granted the same rates of capital allowance. Equal percentage of allowance will be claimed by different taxpayer. So what you are saying here is that if taxpayer A is claiming his own capital allowance, taxpayer B will also be claiming his own capital allowance. So it is not just only meant for for a specific company. So it shall be granted to every company that are into businesses in Nigeria. So the same set of rules apply to all tax payers. If if company A is granted 10% as capital allowance on its motor vehicle, company B will also be granted 10% on his motor vehicle. So we can't say that company A will be granted 10% while company B will be granted another rate. So it is a uniform rate and it is also consistent and applied to every taxpayer. Conditions for granting capital allowance. Number one, the expenditure must be incurred. The expenditure must be incurred on the assets. The expenditure must be incurred on the assets by the business. So you must have that asset. You must have incurred on that asset. You must have whether construct or purchase. You must have incurred an expenditure on that asset. The business claiming the allowance must also be the beneficial owner of the assets. If you have two businesses, let's say we have ABC Limited and we also have XYZ Limited owned by the same person. You cannot say that you want to claim capital allowance that XYZ Limited is having on his businesses for ABC Limited. No, the company that is claiming the capital allowance must also be the company that owns the assets. So the business claiming the allowance must be the beneficial owner. The qualifying capital expenditure must also be in use at the end of the basis period. You cannot just purchase an asset and keep them in the company without using them. It's also the same way with the depreciation. Depreciation will be charged on the assets when the asset is put into use. Are you getting my point now? So when you purchase an asset and you just keep the assets in your company without using them, you cannot charge depreciation on them. So that is if the asset is already in the condition for which the management can decide that it can be put into use. You need to start charging depreciation. So then for the capital allowance, the asset must also be put into use. The asset must also be used for the purpose of trade, business or vocation for generating taxable income. If you have an asset and it is not used for the business, you cannot claim capital allowance on it. A claim should be made by the company before capital allowance can be granted. A claim should be made, which means you need to write revenue service before you can claim. But in practice, nobody does this. Nobody normally writes to them because it might really take time. It might sometimes before they can even give you the certificate of fixed assets. It may be maybe like 2 years before the certificate can be ready. So one thing is that once you claim it, the tax authority will then do their own review of your taxes that you have provided to them. A claim should be made by the company before any capital allowance can be granted. However, if no claim is made, some allowances can still be granted, whereby the revenue is of the opinion that it should be reasonable and just to do so. Capital allowance is claimable after loss relief has been adjusted. I emphasize on this when we are doing the loss relief. The amount of capital allowance calculated is generally restricted to percentage of accessible profits. So 66 66 to third. You can just say to third of our accessible profit. So any company in the agro-allied industry or which is engaged in manufacturing is not affected by this restriction. Is not also affected by this restriction if you are into a manufacturing, but if you are into a service or you are just buying or you are selling, you cannot uh, that restriction will be affected. Then the types of capital allowance that we have initial allowance. So this is the allowance granted on all qualifying expenditure when it is acquired. The allowance is granted in the first year of acquisition and charged on the purchase cost of the assets, whether purchased new or second hand. This type of allowance is granted in full once in the life of the qualifying capital expenditure. Initial allowance is granted in full irrespective of the number of months in the relevant basis period. So this is what we are saying. You purchase an asset of 50,000 in the month of October and your year end is December. How many months do you have between this and this? Let's say you purchase on October 1st. How many months do you have between October 1st to 31st December? How many months is this? Hello, how many months do we have?
Between
October 1st to 31st December, how many months do you have?
3.
Exactly 3 months. So what we are saying here is that regardless of the months that you purchased these assets, between regardless of the months that you purchased these assets in your basis period, you will still be allowed to charge full amounts of your you are still going to be charged your full amount of your of your annual allowance. So let us assume that the annual allowance is 25%. And 25% of this is how much? 12,005. So you'll be allowed to charge the whole 12,005. So you don't need to prorate anything, provided it is provided it is initial allowance. Are you getting it now? So that is what we have. Then we also have an annual allowance. This is granted annually and is computed on the balance of the cost after deduction of the amount on initial allowance claim. This is what we are saying. You have an asset, you purchase an asset. Let's say this is purchased on 1st October for 100,000 naira. And your year end, your basis period is 31st December, which is 3 months. This is 3 months. So what we are saying here is that if your annual allowance is, let's say, 25%, 25% of this is 25,000. Before you can calculate your annual allowance, is going to be on the remaining balance, which is going to be 75,000. Are you getting it now? It will be 75,000.
Sorry, not clear, sir. Not clear.
It's not okay. It's not clear. So this is what you are saying. On the 1st of October, you purchase motor vehicle for 100,000. the first thing you need to charge here is your year end is 31st December. The first thing you need to charge is your what? Your initial allowance. If your initial allowance is 25%. So your 25% of this is how much? 25,000.
1,000.
So what will be the balance? 75,000.
75,000.
So before you can charge annual allowance, it must be on this 75,000, not on
Okay.
the whole 100,000. You must
Okay.
have, that's what we have here. On the balance after the deduction of the amount of initial allowance claim on the assets, annual allowance is calculated using the straight line method. So you can now say that this 75,000 divided by the number of the useful life. And how can you also even get the useful life of the asset? The useful life is the 100% divided by annual allowance. If your annual allowance is 10%, useful life will be what? It will be 10 years. Is it clear?
Yeah.
Exactly. So
It's,
that is
it's
what.
fine.
So where the basis period for any year of assessments is less than 1 year, the annual allowance for that year of assessment shall be proportionately reduced. This is what we are saying. We have what's it called? After deducting our initial allowance, what we have left is 75,000. So our annual allowance will be how much? It will be 75,000 divided by 10, Abi, which will be
Yeah.
7,005. But we are now saying that because you purchase this for October, which is 3 months, for this particular one, you have to prorate it. Are you getting my point? You have to prorate it. It will now be it will be 3 divided by 12, 75,000. That is what we are saying here. Is it clear to you? Is it clear to us? Does it make sense to us?
Sorry.
Is it
Now,
understood? Okay.
sorry. Just a question, sir.
Okay, sir.
The initial one, initial allowance which you made mention, that was
Yes.
for the 3 months.
Mm-mm. Initial allowance is not prorated. You don't prorate initial allowance.
Yeah.
Let me give a scenario. Assets qualifying capital expenditure was incurred on motor vehicle. Okay, was incurred on motor vehicle on 1st October 2024. The year end of the business is 31st December
And
annually. The total cost of the vehicle was 150,000, assuming the capital allowance is provided as follows. Initial allowance 25% and annual allowance 20%. Calculate the initial and annual allowance for 2025 year of assessment. So this is what you are saying here. The cost of the assets is how much? Cost of the assets is how much?
150.
150,000. Okay, wait. This is our year of assessment. Abi,
Yeah.
we have basis period. And then we have capital allowance. So what our year of assessments is going to be what? 2025.
25.
Are you getting my point? 2025.
Yeah.
So the basis period will be when? One,
Okay.
one. Though the business has been in operation before that time. So this is not a commencement now. So it will be 1/1/24 to 31/12/24.
Yeah.
So if this is the case, so we have costs. Cost is how much? Our cost is 150,000. Then our initial allowance at 25%, right? So how much is that one? 150 divided by 4.
37,500.
37,500. So this one will go for 37,500. So what will be left?
112,500.
112,500. So we are now saying that our annual allowance will be computed on this 112,000. And how can you know your annual allowance? Your annual allowance is going to be costs minus initial allowance all over number of years to be used. And I said here that number of years to be used, number of years to use will be what? 100% all over annual allowance percentage, which is 100% divided by 20%, which means this is how many years? 5 years. So you now say that 112,500 divided by 12. I mean divided by 5. What do we have?
22,500.
22,500. It means our annual allowance is 22,500. But we are now saying that the basis period, as in the months that you got the asset within the basis period is how many months? It's 3 months. You now say this one will now be 3 divided by 12 times 22,500. That's how you got your annual allowance. What do we have? Just for only 2025 year of assessment. So what will you have here?
5,625.
5,625. So this is your 5,625. 5,625. So this is the total capital allowance that we will charge we add the two together. So when we add the two together, this one, whatever we have here will now be our tax written down value. So in 2026 year of assessment, what will you have? Your basis period will be 1/1/2025 to 31/12/2025. So you cannot charge any initial allowance again. So what you are only going to charge, the only thing you charge
Annual
will be
allowance.
exactly will be annual allowance. So which will be what? 22,500, because this is already 12 months. So we don't need to correct anything again, because
Yeah.
this one is just only 3 months. The basis period here is just only 3 months. That is why we corrected only this. But initial allowance, you don't correct, you recognize in full. Is it clear now?
Yeah, it's clear, sir.
Okay, so I think this is where we'll be dropping the ball for today. So by Wednesday, we can now forge ahead. So at least I've introduced us to the capital allowance, and we have also discussed about the initial allowance, and then we have also discussed about the annual allowance.
Annual
So
allowance.
in our subsequent class, and the issue that I'm having is that I just hope I will be having time for us on Wednesday, because I've been working from home before now, so and I'll be going to office. But
Okay.
if I'll be having the time, if I'll be having the class with us, I may not be able to be writing like this, because I can't. This my gadgets. I may not be able to carry it to where I'm going. So which means we will need to be using Excel. So, and I hope you guys are already familiar with the use of Excel in your other
Yeah,
classes now.
it's okay, no problem.
Okay, yeah,
I
thank
still
you.
like this subject.
Yeah,
Thank you
okay,
so
thank you.
much.
So
You're very, very
you
grateful,
are
sir.
welcome. Yeah, so we shall meet. May Almighty Allah spare our lives, and we shall meet by the next class. Yeah.
Allahumma,
So thank
Allahumma amin.
and
Amen.
yeah, thank you for your time. Yeah.
Thank
And
you,
have
and God
a
bless.
good, I mean, you too. Yeah, bye.
Thank you.
Yeah, man.